This is Greg Owen, the CEO of the GoCo Group. Well, you know, it's now 12 months since the COVID-19 disaster hit the world. And back then we asked Harry to come and share with us, Harry Dent, come and share with us what's going on. Now, because it's the 12 months anniversary, I thought it'd be a great idea to bring Harry back, ask him some questions and give us some insight. What's going to happen over the next 12 months. Also, in my conversation with Harry, he said, Greg, I'd like to share with some of the people how I do my forecasting, just some of the principles, some of the secrets that Harry Dent has used over the 30 years of his research. So we look forward to that. Now, look, I'm in Brisbane today. It's a beautiful day. And so we welcome those all around the world. I know we have people from America. I had people ring me from Hawaii and people from England and so forth. So welcome, a big welcome. Now listen, today's program, I'll be asking Harry a series of questions. And then after that, we do have Sean Allison. You do not want to miss hearing Sean speak. I know so many haven't heard Sean, and I suggest that you take the time and listen to Sean Allison today. And then after Sean, we have Aidan Mickelson. So we have a great program for you today. Now, as I said, 12 months ago, the share market crashed. We had this virus hitting the world. The world looked very, very bleak. We didn't know what it meant. But what's happened since? All sorts of things. The share market recovered. Bitcoin went crazy. Property in Australia has gone white hot. And I'm sure it's the same throughout the world. So it's been a crazy year. I don't get it. And that's why we need somebody like Harry Dent. So I'd like to throw to Harry now. Harry, welcome.
Oh, hi, Greg. Good to be here.
Great to have you. Harry, I don't get it. Everything's going crazy. I mean, Australian real estate, it's white hot. Bitcoin gone crazy. The share market did recover. It's been oscillating a bit, but it did recover. And we've come up with a vaccine for the virus. So it's been an interesting 12 months. So we look forward. And thank you also for sharing with us some of your secrets that you have used. And you're going to put that inside your presentation or the questions that I asked you. Harry, right up the top, I just want to ask you, look, 12 months ago, Harry, we had a webinar with you and the share market had collapsed. You said back then, we're heading for the Great Depression. And many other commentators, some of your buddies like Jim Rickards and Robert Kiyosaki also said the same thing. Harry, are we heading for the Great Depression still?
Of course we can. You can't have a great boom without a great bust. People, I was doing an interview today, Greg, with a guy, and he said, Harry, why are you so negative? I screamed at the guy. I was the most bullish economist in all of history from the mid to late 80s on, when I saw the giant baby boom coming into the United States and Europe and Australia, New Zealand, and most of the world. And now, of course, we peaked in that. And now we're living off of endless stimulus. Why would I not be cautious? If I weren't, I'd be an idiot. So people have to understand that as much as we don't like it, life goes up and down. The economy goes up and down. There's booms and busts. There's inflation, and then there's ultimately deflation. Now, what I've been warning about most, Greg, which nobody gets, including Jim Rickards and all the gold bugs, the next stage after we get through this challenge is deflation in prices, asset prices, $525 trillion of financial assets, stocks, real estate, bonds, and all this stuff go down 40, 50%, and money disappears. The economy slows because of that, and more than in the last recession, the Great Recession in 2008, because we just took that recession and printed money out of it. That's not a solution, okay? Greg, I hate to say it, I have a hard time saying anything about economists without, cussing, okay? Because they don't get anything about our economy. You do not have booms without bust. And in bust, You get rid of the excesses of the last boom and the worst companies, and you make way for new things and new technologies and the next generation. And that's how we grow. We have to have booms and busts. We have to go up and down. No, everybody wants a 3% growth economy at 2% inflation that never has a recession. Everybody wants to go to heaven. Well, you can't do that here on Earth. And so I'm in the Earth business. I understand. I don't know why I got in this, Greg. Frankly, I did not plan to be an economist. I mean, who would grow up and say, I want to be an economist? What would that say? No chance of ever getting laid, okay? I did not plan to be an economist. I studied business and consulted to Fortune 100 companies and then to new ventures. And I learned the most from the new ventures because they're creating the future. The big companies are the past, running through and slowly dying. The new ventures, the new industries, the new generation is the future. And I just happen to be studying new businesses and new technologies and the baby boomers when they're first emerging in the early 80s. And I got this huge insight, which was actually simple. Oh, people drive the economy, not governments. People grow up and spend more money. Technologies come in and make us better and more productive. All these things happen on unbelievably, and I'm going to stress that, unbelievably predictable cycles. I was shocked. It's like, are we shocked when the sun comes up every morning or it gets cold every winter? No, we're not. But the economy has the same thing. It's just, you have to understand what cycles are important. And I've spent 30 years, going on 40 now, finding out what's most important. And that's what economists miss. They study all types of stuff. They don't understand what's important. Generations create our booms and busts. Technologies create our leaps in productivity and standard of living and new things that never were possible before. If you study those things, the economy's not that complex and it's incredibly predictable.
Harry, what I love about you is that you've always had the courage to take on forecasting. You've had a go, you've made a call. And of course, you always have every man his dog that wants to be critical when certain things don't come out quite the way, because they don't have the courage that you've got, but you really do have the courage. And that's why people come and listen to you, is because you will have a go and you'll stand tall with your comment. Harry, you say that economists miss the most important principle of economics from the beginning. In fact, you say it's almost an important principle of life. What is this principle and why does it cause economists to be so ineffective in forecasting economic policies?
Well, economists and us as human beings, the most important principle, think about, how do you get life? You have to have energy to get life and manifestation. How do you get energy? What's the principle of energy? A battery has positive and negative poles. It's the play of opposites that creates energy, and energy creates manifestation and life and growth in the economy and all the things we want, you know, kids and babies and everything. You have to have this play of opposites. Now, the problem is we as people have our own biases. Oh, we like the booms in the play of opposite. Oh, we don't like the busts and the recessions. You know, oh, inflation is kind of bad. Oh, deflation is worse. We don't understand that life does not work. We do not grow. We cannot have this miracle of existence if you think about it. I mean, our standard of living is 10 times what it was 120 years ago, 10 times. That's a miracle. And we're sitting here thinking, oh, we don't have enough money and blah, 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 I can't pay the bills and blah, 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 blah. This is crazy what happens in this play of opposites. And it's not just boom and bust, inflation and deflation. It's male and female, okay? Why are we attracted to each other even though we're opposite? Because we create this energy together in this dynamic. We offset each other's strengths and weaknesses as men and women. So it's male and female. It's dark and light. You look at the universe out there. Oh, there's all this darkness, but there's also these lights and stars. And you know what, people who have to deal with movies and TV and stuff say, you know, the way you get the best colors and light is have the darkest background, dark and light, okay? It is this play of opposites that creates the energy for manifestation and growth. But our problem is, as people, individuals, and as economists is, no, we want the good, not the bad. We only want the good part of the play of opposite. We don't want the kick in the ass. But I always start my presentations now, Greg, and you've heard this recently. I always ask people, when did you learn the most in your life? When you had your ass kissed or your ass kicked? And I'll tell you, that's an easy one for me. It's the ass kicking.
Absolutely.
So we don't want the downside, but the downside creates the upside. I have studied innovation in economics so far back, you would think I need to find a girlfriend, okay? But I can tell you, the greatest innovations, without exceptions, happen in the down cycles when we're challenged, not in the up cycles when we're getting our ass kissed. So we need both. That's the secret to economics. Economists want this, again, this 3% growth economy with 2% inflation and never have inflation. You know, Janet Yellen said in the United States, little Miss Tweety Bird, oh, we can't have a recession. Oh, we can't have a recession no matter what. What the wrong is wrong with you? You know what's wrong with Janet Yellen? She never had sex or run a business. That's what's wrong with her. She's an economist, all types of education. She does not understand the play of opposites. The only way you understand the play of opposites is to be in the wrestling ring in real life and get your ass kicked and then realize, oh my God, that's how I learned. That's how life worked. You can't just have good. You have to have bad. You can't just have boom. You have to have bust. And you can't just have inflation. You have to have deflation ultimately. And deflation, from my study of history, creates the most radical innovations. And we're about to see some of the most radical innovations in history in the next several years because we're in a deflationary era.
Harry, I remember back in 1987, and we had the big crash of 87, and we had the big crash of 2008. And I remember seeing the hurt in people's face and in their eyes and the fear of the money that they'd lost. But we've now had quite a time since there's been any sort of pain. And I'm seeing people, they've never seen pain. They really do think they're just going to keep going up and die and go to heaven, as you call it. A lot of people are in for a shock, a big shock. And that is big pain and a lot of hurt. You don't see it until people realize, oh my God, my $200,000 is now worth $80,000. It's a life-changing moment, but some people have never seen it. Thoughts?
Well, you know, first of all, you have to understand, again, this play of opposites. Why are we in this painkiller economy? We are stopping the pain. That's what, ever since we had the Great Recession in 2008-9, and it looked like it started to be a depression, which it was supposed to be, would have been naturally. Governments just said, we can't have this. We have to what? Give us pain pills. Look, okay, if you're in pain, like 2009, pain pills make sense up to a point. But if people keep taking pain pills and it takes more and more, like everything in life, the progressive principle of life, another important principle of economics and life and everything, it takes more and more and more to get the same type of satisfaction or result. And then, you know, it's harder and harder for it to go down. So when this happens, people go, oh, we don't want the pain. So what do? They take more painkillers, all this stimulus, all this money printing, and now in the US alone, $5.1 trillion since COVID in a year of fiscal stimulus on top of $4 trillion in monetary stimulus, which was as much as all they did before that in 1 year, just to get over this thing. And people say, it's okay. Greg, we are on heavy painkillers here. What do painkillers do to you as a person if you take them because you have pain? Yes, it's natural to want painkillers. If you take them and keep taking them, they kill you. They're toxic. This all this stimulus distorts the economy, keeps zombie companies and bad industries existing in bad countries, and prevents the new from rising and investments going into more productive investments. And I've got a great indicator, one of my 5 or 6 major ones called money velocity says, oh, guess what? It's been going down since the mid to late 90s in most countries because we've been putting money into unproductive investments and speculative instead of real investments and real productive capacity for real things that create real products and services for people in the future and pay off. We're not doing that. And so how do we compensate for not doing that? Governments print money and cover it over. So if you believe in magic, that you can just wave a magic wand when you have a problem, like you think when you're 3 or 4 years old, and it's okay to think that when you're that young. Well, that's what you're believing in here. Central banks are creating magic, money out of thin air, thrown into the economy to make financial assets higher, to make people feel a little richer, and to keep the economy growing at 1 to 2% while we go to our grave. We're going to have the biggest collapse since 1929 to 32, likely in the next 2 to 3 years. And you know, right now, not a sign of it, Greg. That's when you should worry. When there's not a sign, where the leaves are not rustling, when there's no birds chirping, nothing. Something's wrong here. We're growing for no reason on artificial stimulus now for 12 years. And it just took $9 trillion, 44% of the GDP of the US, just to keep us crawling forward. I think we're in trouble. If you don't, you're blind. People hate me right now, Greg. I'm sorry. You know, people loved me when I was bullish in the early 90s and stuff, and Dow 10,000 by 2000 back when it was 2000. You know, no, people hate me right now. I'm sorry. You need to listen to me, not the people in the government and economists who say, "Oh, it's okay. We have a crisis. We'll just print another $5 trillion. What's the problem?" That is something for nothing, and the stupidest policies ever. And mark my words, I'm gonna have to ask you to listen to this today and listen to this 5 to 10 years from now. This will go down as the stupidest, most naive policies in all history. You could wave a magic wand and make a great recession or depression go away. Oh, that's fairy tales.
Of course, only last week, another 3.9 trillion to be printed. Another 3.9 trillion. What damage is this doing to your cycles?
Well, again, all it's doing is fighting reality. Okay. The biggest thing with human beings, we don't want life to go up and down. We fight it, and it creates a lot of bad psychology and problems. This just by the fact that we've had this downturn from excessive debt and the peaking, which I predicted decades before, so it was not an unpredictable factor, of the baby boom generation in most developed countries around the world. So it means we go into slowing. To sit there and say, we don't want to deal with the slowdown, we don't want companies to go under, we don't want to write down unproductive debts, which is what we've done in every downturn in history, especially 1929 into 32 in the 1930s. And by the way, we came roaring out of that faster than ever. We're denying life. You grow, and then you grow too much, and you have to get rid of some waste and go on. You eat, and then you know what we do. You know, that's what we do in life. That's the principle of life that economists and people don't get. You grow, and then you eliminate. Since 2008, we stopped the economy from eliminating the bad companies, the excesses, the bad debt, and we just added more debt, added more money printing, and more artificial growth to make up for it, which means we're only like any drug addict. So think of a fiscal drug and any other drug. like any drug addict, we're just more addicted, more out of balance, and need a bigger collapse. We're going into a rehab economy in the next few years. And it's just a matter whether it's tomorrow morning or a few weeks from now, or at most the end of this year. I don't think we get to the end of this year. I think we're closer to it happening now because we keep pushing this thing and there's nowhere to go from here. Are people going to keep how many times can you refinance your house and get a lower rate? How many times can you upgrade to a better house or buy a better car until, oh, we already have it already and we had it for free for no reason? So this is going to come to an end. I'm just telling you, Greg, I became a cycle expert early on, but I became a bubble expert in the last 10 years since we're in such a bubble era. Bubbles only end one way, badly. There is no soft landing to any major bubble in all of history on any place or standard.
Harry, the longest stock bubble in history was 5 or 6 years. And now the current one has now lasted 12 years. And we've talked about the real estate bubbles, which is completely blown. I mean, we're talking these are the bubbles of the bubbles.
Yeah.
I mean, when are they going to burst? When will they?
Really, we've had bubble after bubble in stocks. We've had two major ones around the tech stock bubbles. The first one that peaked in March of 2000 and crashed 78% during a boom period. That was the biggest wake up call to me because I was very bullish from the early 80s on because of the baby boom generation. I did not expect you could have that big a stock crash during an ongoing boom, but it happened because stocks got so overvalued in the first tech bubble, and the dot-com stocks were the greatest part of that at the end. Well, we have the same thing now, almost 20 years later, the second tech and stock bubble coming this time during the bottom of the demographic and longer term cycles, because governments have just pumped up things and pumped up stocks, and the rich keep getting richer because of that. And at least they spend a little more money, and the economy grows instead of 4 or 5% at 1 to 2%, which is dismal. But the stock market gets all the money from this money printing. It just goes into financial assets. All these rich people get all these gains and they put it back in the stock market and it goes up. So this is a totally artificial stock market. Has nothing to do. I have the greatest demographic indicator, Greg, that goes back to World War II. And I discovered in the mid 1980s, okay? It says when the economy should go up and down with generational spending cycles, our economy, the Dow should be 12,000 today on that long-term, very predictable indicator, and it's at 33,000. And once a market crashes, it's going to go below fair value. So what does that tell you? 33,000 Dow goes down to, I'm guessing, 5,000. How many people in this audience are ready for that? If you're not, you're out of reality. I may not be right here, but I'm telling you, I have a much higher chance of being right on this because I've studied these extreme cycles and bubbles and demographic and technology cycles in history. I'm saying this is coming in the next few years. And if you don't see it coming, you're going to be in shock. And you're going to wake up one day and say, oh my God, I thought I was going to retire at 65. But now my house in Sydney is worth $200,000 instead of $500,000. Oh, my stock portfolio instead of $600,000 is down at $200,000. I don't know how I'm going to retire. That could happen in 2 years by my scenario if I'm just half right.
But what happens, Harry, if they just keep printing money for another 10 years? A lot of money.
Well, they've already done it.
They might do it another 10 years.
Okay, let me give you 2 simple examples from real life. How do you get an avalanche on a mountain from snow? Okay, unless you have an earthquake or something, you just keep building up more and more snow and snowflakes on a cliff until one, and Greg, I'm going to say this, one freaking snowflake tips that avalanche. One. It's just that much to create the straw that breaks the camel's back. Same thing. Another example, you drop stones, little pebbles onto a flat piece of paper, builds a mound steeper and steeper and steeper until what causes that mound to collapse? One pebble, not some macro thing or stuff. It gets just the point. One pebble is too much and the whole mound collapses. That's what's about to happen here. You can believe me or not. I'm telling you, if you do not listen to me here, you may be in great, 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 great pain. And if I'm wrong, you may miss another 5 or 10% of the most overvalued stock and real estate markets in all of history. And if you look at history and buy here, you're already an idiot. I'm just telling you this. I'm not trying to insult you. I'm just saying, if you look at history and get out of la la land where everybody is getting a 3% mortgage rate instead of a 6% and a 2% car loan instead of 7%. And your house has gone up 3 times in the last 20 years when it's the same stupid house you bought on the same everyday block. If you don't realize there's something wrong with that, then you're asleep. And if you're asleep, you're going to get woken up. That's all I'm saying. And if you don't believe me, do your own research and look back at history. Bubbles in stocks, bubbles in real estate like this. And this is greater than 1929 Roaring 20s bubble. This second tech bubble is greater than the first tech bubble into 2000, okay?
Whoa.
The housing bubble now, especially in Australia and China. China is the most overvalued real estate market in the world compared to income. And Australia is second. We in the United States look like nothing. Even Canada's worse than us because we got our ass kicked in the 2008 GFC, okay? You guys didn't, Canada didn't, China didn't. But even the US is going to see real estate prices go down 30, 40, 50%. And Australia, I don't want to quote it, okay? You need to wake up. You've had the best economy. You haven't had a recession since what? 1990? Wake up. Nobody doesn't have a recession that long without having their ass kicked. You are the best demographic economy in the developed world. That's why I love you, other than loving the Australian people. But I'm telling you, you guys have the biggest real estate ass kicking coming and a substantial banking crisis because of that. So you need to get out of the way of that.
And look, your love for Australia has gone deeper in that you recently launched the Densector Fund. And I know it's very dear to your heart. And I'd like you to tell all of our viewers your vision behind the Densector Fund, what it's about, why people should be putting their money in there, some of their money in there, protect them against hard times that could come very, very quickly. So, over to you, Harry.
Okay, Greg. Yeah, great question. I mean, I've always had the vision since I understand these cycles. And stocks do go up most of the time, but they go down for 14 years at a time in an average 40-year cycle. What do you do in a normal stock fund when it goes down for 14 years? And interest rates have gone up for 20 years and now they're going down. I mean, all things go up and down. So there's no one fund that you can have as a core fund for your retirement. So I've always wanted to start such a fund where I look at all my cycles and I am not limited to bonds or stocks or this sector or that sector. And I can make the shifts for you as these demographic booms and busts and technological booms and busts and overvaluation and undervaluation sectors happen. I can do that for you in what I call a core fund. So the Densector Fund, densectorfund.com, it's just simply, it's a core fund that you can have at the center of your portfolio. Now, in addition to that, you can add income funds, you can add technology funds to give it more oomph, whatever. And in fact, I already have, I can tell you today, I already have a vision for a second fund for maximizing income, but that would have to start about 2 years from now on my cycles because I do everything in my cycle. This is the time to be into this fund because we're going to, first of all, protect you from the down cycle, but also get you into the best sectors of aging aging sectors in Australia and the United States and the developed world, and most importantly, into India and Southeast Asia. The next boom is not going to be China and Japan. It's going to be India and Southeast Asia. And we're going to be there before it happens, not after it happens. So this fund is meant to give you a way to grow in up and down cycles and to take advantage of all of our expertise in demographics and in cycles, and be a core fund, which you can add other funds to. And I'm telling you, I'm going to give you at least one, maybe two more funds to add to that in the next 2 to 3 years.
Harry, I had a gentleman call me about the fund. He was a young man. He was in his 30s, so he's never seen any pain, of course. And he had $1.4 million of the family super fund, and he and his brothers had a wood pruning business and so forth. And he said to me, Greg, I've got $200,000. I think I may put it into the Densector Fund. And I told him what you said. It was a great place to have your money hedged against a challenge coming up. Don't have all your eggs in the one basket. Yeah. He said, I'm thinking I was going to put the money into Bitcoin. What do you think? And I said, well, okay, Bitcoin's nice. And I said, it's going to have its ups and downs. I said, do you have any other money in Bitcoin? He said, oh yeah, we have another, 300,000 in Bitcoin. I said, well, that's a bit heavy on Bitcoin. At any rate, cut a long story short, he said, I think I'll put the money in the Densector Fund. But then a week later, when we got back to him, he'd bought Bitcoin. So this 30-year-old young boy is seeing the flickering of the big lights shining, drawing to Bitcoin to plow all the money into Bitcoin. Now, I'm not a person that's saying anything against Bitcoin, but I'm just saying that don't put all your eggs in the one basket. I was trying to say to him, but I failed getting that through to him. What would you just say to people out there about putting money into the Densector Fund? Why should I put money into the Densector Fund?
Okay, number one, this is designed, and how many offerings do you have of this? A core fund. This fund is like the core 20 or 30%, it could be more in the future, depending how it goes, of your portfolio, where we, again, manage these shifts. I know when countries are going to boom and bust, stocks going to boom and bust. Yeah, we can't get it right in the short term all the time. Nobody does, but we know how to make these shifts for you, so you don't have to worry. So, and then if you want to add more zoom to that on the upside, you can invest in a technology fund like ARKK or something like that, okay? Or if you need more income, you can get into a bond fund, okay? And again, I have a really good idea, but only 2 years from now, for a great high income fund as baby boomers age, okay? So you need a portfolio, but this is a core fund. This is the fund you can put at the center of your portfolio, and unless we screw up, you don't have to manage, and you can add more or less with your financial advisor as things go up and down and as your need for income or growth changes. But this is a core fund, and I'm telling you, we're looking at all the cycles that will affect this to protect you. There's no way you, and I'm telling you, I hate to say it, I love financial advisors. I've worked with them for 40 years. They cannot see what I can see coming. They don't have the capacity to see these shifts in different sectors of countries and stocks and bonds and high yield and low yield. This core fund, the Densector Fund, is basically designed to do that for you. Make the basic shifts, not perfectly, just make the basic shifts so you don't have to worry about that. And that's your core fund to build around. I don't know. I can't, if there was another fund that did this, I would recommend it to you. I don't have another recommendation.
So how do people register for this and see the PDS?
Well, again, densectorfund.com. That's simple. You can see what we do, how you get in, the minimums, all that sort of stuff. I am warning people here, Greg, because we're at this precipice where they keep making the stocks go to slight new highs. I don't know if I mentioned it before, this megaphone pattern, new highs and new lows. The next stock crash, and I'm seeing this happening within the next 2 to 4 months, is 45 to 50%. This is the time to get into a fund like this, to be positioned for growth long term, but to protect yourself in the short term. Because I'm telling you, Greg, I've been in the fund industry and promoting the fund industry and financial advisors for 40 years now, okay? No, They can't do this. If somebody's in a long-term growth fund for stocks, they're fully invested. And when stocks collapse 40%, they go down and they don't have any other choice. Same with, high yield bond funds that go down in a downturn. This fund does not. The reason I waited forever to find Andrew Stewart and GoCo group to form this fund is to find people that understood what I was doing and how it was different, so we could promote this fund so people understand why this should be your core fund. Again, not all of your investment, but this should be your core fund, because we're going to give you the upside potential long term and protect you in the short term. And no other stock fund can do that. They have to be fully invested all the time.
So, Harry, this is a fund that's been created in Australia under all of Australian regulations. It's now up and running. I do know from firsthand it's a Ferrari with a good engine. And what you're saying to everybody is, put some of your money in the Densector Fund and just protect yourself. Don't be stupid. Don't be wise here, and put some of your money into the Densector Fund. All right. Well, thank you for that. We'll move on to the next question, Harry. I'm going to always talk about the Australian real estate because Australians love their real estate. And of course, you have been giving them a bit of a whip over the last many, many years about it. Harry, I was speaking to a friend of mine, Max, down on the Gold Coast. He's 78 years of age. He's been in real estate since he was about 20 years of age. So that's 58 years. He said to me, Greg, I've never seen anything like it right now. Down here in the Gold Coast, it's white hot. 50 years in the industry. It's gone nuts. Harry, it's gone nuts. You wouldn't have said that 12 months ago.
Yeah, that's when you sell. Wake up. Real estate is the same stupid, dumb, good or bad, modern or ancient house you live in. And should it be worth 2 to 3 times what it was 10 years ago? Wake up. It's different if you have a stock that has grown 100% and has earnings growing 200%. Okay, that's not what real estate is in Australia anywhere. Same stupid house you're sitting in worth 2, 3, 4 times as much, and you think you should buy it and buy more of it? If you do, listen to me, eye to eye. You're an idiot if you think that. This is the wrong time to buy. The fact that it's going up so much and stocks are doing the same thing in the late stage of this bubble, that's the sign of a top. Not, if you think that's a buying opportunity, you know nothing. So that's why you listen to me. I understand that you would be tempted by that. You just watch things, you do better. Of course you do. I'm the guy that looks at history, ups and downs, booms and busts, inflation and deflation. I'm the guy that can tell you when this makes sense or not. This makes no sense to me whatsoever to buy real estate, especially in Australia, especially in the Gold Coast. Do you hear me on that? If you don't, and I'm wrong 2 years from now, shoot me with my own gun.
But Harry, we're Australia and New Zealand. We're different to the rest of the world.
No, you're a bunch of idiots.
We're going to keep going.
You're spoiled by endless growth, endless immigration from people who are smarter than you from Asia, and you think you're confusing brains with a bull market. Do not ever confuse brains with a bubble or bull market. That's what I can say to you from studying history. I don't care who you are, where you are. I am more worried about Australia's bubble bursting and Canada's bubbles bursting in real estate than the US, because you guys have a big bubble and you are stupider about it. You think this cannot burst, which is the exact reason to sell now.
But Mark Boris said it'll go up and then just flat line.
Oh, Mark Boris doesn't know. He's in the industry. I love him. He's the nicest guy I've ever met. He's smart. He's in the industry. He's promoting the industry and mortgage and stuff. Don't listen to somebody in the industry to decide if the industry is overvalued or not. They're not objective. I don't give a shit about anything. Did you hear that? I don't care about anything. I am objective. Maybe the only objective person in the world left. I'm saying greatest bubble in real estates and stocks and all financial assets and all of history, the most global, and it's going to burst. And when it bursts, there is no soft landing possible anywhere. especially Australia, because you are the second worst real estate bubble in the world, second only to coastal China. And that's really bad.
Harry, you may have some people here choking on their popcorns this morning.
Well, they should be.
I love your passion. It's fantastic. Harry, the share market. What's going to happen to the share market? What do you see? I'm going to put out there to your forecasting on the share market. Where are we going with the share market? Come on, give us one.
Okay, I'll just ask you a simple question, Greg. When we have a major downturn, like 2000, 2002 in the tech wreck, or 1929 to 32, the worst in history, what goes down the most? Real estate? No. Real estate goes down 30, 40%.
Now the share
Stocks
market
go down 70, 80, 90%, 89% from 29 to 32. 89%. And those were blue chip stocks. Those were not small caps, junk bonds and junk stocks. The highest, this is Ford, RCA, General Motors, the greatest company of the era to become the greatest companies after that. And they went down 89% on the Dow 30. That's what we're looking at here. You can think I'm wrong. Well, I would ask you, maybe I'm wrong. What if I'm right and you hold out for another 5 or 10% in the Australian, the ASX 200, or the Dow or the NASDAQ, and the NASDAQ's already sucking wind, the biotech's already sucking wind, Bitcoin's already maybe sucking wind, already a hint here. You gonna hold on to this and hope that since you've been lucky for 20 or 30 years in the greatest boom and a bubble that should have peaked in 2007, but has been gratuitously extended by endless money printing, now up to about 40 trillion globally, for another 10, 12 years, you're going to say, I'm going to keep riding this train. Hey, here's my message to you. Be my guest. You want to ride this train? Be my guest, because I am telling you today, when this bubble does burst, and I think it could happen in the next couple of weeks or couple of months, okay? But whenever it does, the first crash by history, 29 to 32 and 2000, 2002, every major bubble, the first crash is going to smack you 45 to 50% in the first 2 to 3 months. And kick your ass so bad, you're going to panic and sell and miss the bounce after that and wish you had died. That's what's going to happen to you if you say, oh, Harry, I'm going to wait until there's proof that this bubble's going to burst. Well, bubbles suck every dumb sucker on the Titanic before it sinks. That's what bubbles do. They suck everybody in. And when there's nobody left to buy because every dumbass is in, for a something for nothing bubble, they collapse so fast, everybody gets crucified. And everybody, mark my words on this, when this bubble crashes, everybody in it's going to feel like I'm the dumbest person that ever walked the earth to have bought this something for nothing bubble scheme. What was I smoking? That's what you're going to think.
Harry, the giant investor, Jeremy Grantham, is saying that we are months, not years away from this market topping and crashing. Do you agree?
Yeah, I tell you, Jeremy is the grandfather of people like me that looks at long-term cycles. He's not somebody, I'm always out there. I have a newsletter. I have to be bullish or bearish all the time. He's the type of guy that sits on the sidelines and he only comes out once in a blue moon. He started coming out in January of this year, 2021, and saying this is a bubble and we are within months. When he comes out, he's saying we're within months of a crash, no longer multiple months or years. And I agree with that. He came out in January and especially February strong. And I think this bubble is most likely to peak by late April, could be a little before, could be a little after. I think we're right there. And this guy is older and smarter than me on this sort of long-term thing. He only comes out when he's convinced. And what he said was very simple. He's not reading stock charts, which he does, and I do, and everybody does. And stock charts suggest a lot of this. He's saying there's a level of euphoria on investors. And you got you got small traders at the highest call options in all of history by 10. I mean, it's so off the charts. He's saying this is a level of euphoria that says you're within weeks or months, no longer months or years from a top. And I do agree with that. And I'm so happy to see somebody older and smarter than me on this come out and say, it's time to get out of this bubble and give up the last 5 or 10% if you have to. You hold on for that. Remember, the first crash is 40 to 50% in 2 to 3 months. And that's when you'll panic and sell and wish you hadn't. And so just be, or at least pull something off the table here. Listen to reason here. I'm telling you, if you think this market can keep going up yes, of course, as you said earlier, they're going to print more money. They're printing 10 times more in the last year altogether. It's having less and less effect, like any drug does. It's a sign you're about to collapse and head into rehab. It's that simple. This is common sense. I have all types of sophisticated long-term indicators, and they're really good. And they all point down together into 2022-23 and say we should have the worst bottom in our life in the next 2 to 3 years. This is just common sense. When things are this crazy and people are buying stocks and small traders are going on call options, 10 to 20 times leverage, totally bullish. That's the shoe shine boys in 1929 that told Joseph Kennedy to get the hell out. It was not sophisticated. Shoe shine boys telling you to buy stocks, time to get out. Small traders, 10 to 20 times leverage on call options on stocks, time to get out. Just for 6 or 12 months and see if I'm right. If I'm wrong 12 months from now, then dismiss me. You should get out. You should start protecting yourself now. If you don't, you're looking at history and saying, I think you're stupid. History is going to look at you and say, you were stupid.
Harry, I said at the top of the show that you share with us some of your secrets. And I know that you quote the Elliott Wave patterns a lot. And sometimes you agree and sometimes you disagree with Robert. Is it Prechter?
Robert Prechter, yeah.
And the founder of it. Why is that? Why do you agree with him sometimes? Why do you disagree with him? And why do you use the Elliott Wave pattern?
Okay, first thing, when I was doing my long-term research, I looked at I studied 10,000 years of Western history, okay, in my spare time while managing a company in the 80s. I studied everything. And Robert Prechter was one of the first people that came on my screen. He had this 500-year mega innovation inflation cycle. He understood cycles. And he reinvigorated what was called the Elliott Wave. It's a pattern of how stock booms or any boom and bust happens. 5 waves up, 1 up, 2 down, 3, the strongest wave up, usually 4 down, 5 wave up. The 5th wave is the peak, then you get an A down, B rally against, and C contraction before you go to the next boom. He reinvigorated that from the Elliott Wave of the 1920s, but he was that smart to see it. Now, the reason Robert and I disagree at times, I'm a fundamentalist, okay? I don't care about stock patterns. I use stock patterns over whatever fundamental demographic or cycles I have. And of course I love the Elliott Wave. It does work, but it's a pattern. It's not set in stone, okay? Robert Prechter would say, oh, these Elliott waves are set in stone and this is the truth from God, okay? No, they're not. It's a pattern. If stocks are gonna go up, they're gonna have 5 waves up and 3 waves down and a correction before they go up again. That's a pattern. What looks like a 5th wave peak could be a 3rd wave of the last and another one. It's just a pattern. So I use it as that. And I use Prechter's patterns over my longer term cycles. And so I combine them both. But I'm telling you, Robert Prechter is one of my favorite researchers in history. I learned as much or more from him than anybody else I studied. So I love this guy. I just think he thinks that the Elliott Wave patterns are the holy grail, the fundamentals. And I'm saying, no, those are the technical patterns of how stock moves. And the fundamentals decide how long and how high, not the Elliott Wave. So that's why I disagree with him at times. But I'm telling you, I would take Robert Prechter over 9 out of 10 newsletters I have.
Harry, cryptocurrency, Bitcoin. In the last 12 months, since you're on the show 12 months ago telling us about the COVID and your forecast, we've seen Bitcoin go through the roof in that period of time. In fact, it reached last week maybe 60,000 US. It's come off the boil a bit in the last few days, dropped back down into the mid 50s, I think, and whatever. And now you've seen, Tesla get involved, Facebook, Apple, PayPal, some of the big players have jumped on board. Even some of the old life insurance institutions, which is the old money, are buying into Bitcoin. So what's going on? Is this Bitcoin for real? Is it a true asset class?
The concept of it is for real. Okay, I'm gonna have to step back here. Forget everything you've heard about Bitcoin and blockchain and stuff. It's all bullshit, okay? People don't understand it, okay? What Bitcoin and blockchain technologies, more importantly, is the next wave of computer software technologies to deal with not information like on Internet 1.0, information and everybody communicating and talking and trading information around the world. That was a huge innovation, and it took decades to come to fruition now. What blockchain is ultimately, and Bitcoin is just the potential harbinger or potential standard of, and may or may not be in the long term, okay? Blockchain does the same thing for financial assets and money. And of course, financial assets and money is worth more than just mere information. So this is, to me, Internet 2.0. So the way I look at blockchain and Bitcoin, even the people, I'm in Puerto Rico where tons of people are fleeing down here from the Bitcoin industry, okay, and crypto. And I know a lot of people down here. To me, they see the long-term potential like I do. It's the Internet of financial assets, huge 20 years from now. They don't see how they could have as big a crash as the dot-com retailers did, like Amazon, and from 2000 to 2001 or two, in the first tech bubble. The dot-com stocks came at the end of the broader tech bubble and made it much greater because they were part of the NASDAQ back then. And then they created a much bigger crash. Amazon literally went from 6 to 136 back to 6 in 4 years and crashed. And then now it's worth, 3,500. Mm-hmm. That's how new industries emerge. I am not a Bitcoin expert. I am not a blockchain expert. What I'm an expert at, Greg, I understand how new industries emerge, and I understand cycles like 45-year technology cycles and 40-year demographic cycles. And I know what happens. I am simply looking at Bitcoin and measuring it versus like Amazon or the Internet Index back in the late 90s, their crash, 95% crash into 2002. And then the greatest internet boom in history. I see Bitcoin blockchain the same way, but I see it in this same early stage bubble about to crash with the second technology bubble crash 20 years later, okay? And then become the next big thing. So what I tell somebody, I have tons of people in blockchain and Bitcoin down here in Puerto Rico. What I tell them, get conservative in the next few years, let this thing crash after the first bubble like the dot-coms, and then you buy Ripple or Bitcoin, or I saw a thing, Rain Artist, something, a new real estate application that looks like it has promise to me. Buy the real companies that survive. Think if you'd have watched Amazon go from 6 to 136 and back to 6, and you bought it at 6 before it went to 3,500, 18 years later. That's what I see. I am the most bullish guy I know on the crypto industries, but within the industry and the people I know down here, I'm the most bearish. I think Bitcoin's going to go to 3,000 to 4,000 in the next few years, and that's when you buy it. But more important than that, you look for, out of 8,000 coins now, which is ridiculous that we would need 8,000 coins for anything. You look for the ones that survived that crash, like Amazon did in 2001, 2002, and you buy those. I tell you, that would be my number one pick. And we're going to be looking at this at the Densector Fund, okay? My number one sector to look at after the crash and protecting your funds in the downturn is to be in the best sectors of blockchain. And blockchain is the way to define this, not Bitcoin. Bitcoin is just a potential standard and a forebearer. It's not the main thing ultimately. It's blockchain technologies that digitize all the financial assets and money in the world. How could that not be the next big thing? That's bigger than it. Information's worth a lot. Financial assets are worth more in my book. I think this is the next big thing. I just wouldn't touch Bitcoin and these crypto stocks until they crash in the next few years. And then I would load up.
Harry, I'd like to be present at your local country club when you bump into all of your Bitcoin friends and you have a friendly cup of coffee. It must be some interesting debates take place because obviously you would disagree, they would disagree with you a lot.
Yeah.
Now,
every one of my crypto friends down here, and I have a number of them, do not think there's any way Bitcoin could go under 30,000 right now. And I'm saying, I think 3,000 to 4,000 is where it's going, and then it's where I buy it. That's what history would say. I'm a history guy. I'm a cycle guy. I don't care what people think. Anybody in a new industry is going to be super bullish at this early stage. And this is an early stage industry, and it does have huge potential. I agree with these Bitcoin and crypto guys on the potential. I just tell them, you don't understand that at this stage of the cycle, in the same .com cycle, you guys are heading for a 90 to 95% crash. That's what history would say. And I would rather buy history's opinion than their opinion or my opinion otherwise.
Now, Jim Rickards, a very well-respected Jim Rickards, has said that he feels it's an asset class that will one day disappear. So obviously you disagree with Jim.
Yeah, look, Jim is my favorite of the gold bugs, and I debate the gold bugs. Peter Schiff's down here, and then some other gold bugs, and I debate them all the time. Jim is the most informed and the most intelligent of the ones I debate, but he's got that old-fashioned thing. Gold's the only real money and stuff. I'm sorry, gold. There's not enough gold in the world, and hasn't been for decades now, even after we got off the gold standard, to support the growing global economy. Bitcoin could possibly be that standard. Bitcoin has no other use other than illegal transfers of money, which it's great at today. Other than that, and it could be that. It may or may not be. But I think Jim just has that old-fashioned view. Gold's the only real money. We got this bubble. And bubble. See, the gold bug's mistake is to say all currencies have been inflated by money printing, which they have. But what they don't understand, that currencies are not like stocks or bonds that have fundamental values that go up and down with interest rates and economic growth and earnings stuff. Currencies trade relative to each other. All the gold bugs have the same story, and it's wrong, 100% wrong. Oh, when this bubble bursts, the US dollar is the linchpin of the whole global bubble, and the US dollar is going to crash and burn, and gold's going to be worth $5,000, and the US dollar is going to be worth zero. I'm the opposite. My prediction, next few years, gold does not go down as much as most commodities, better than most, not as much as stocks, but gold goes down to $900 to $1,000. That's my best guess, okay? Next few years. It goes down like it did in 2008 with the next deflation in asset prices. The US dollar goes up like it did in 2008 when we had the worst crisis until the one coming, because the US dollar and the US economy is the best house in a bad neighborhood. Have we borrowed too much money? Yes, but Europe's borrowed more. Japan's borrowed way more. China's borrowed way more. We're the best house. When the currencies go down, people are going to come running to the US dollar, number one, and number two, probably a race between Australia and Sweden. And I'd bet on Australia now. So do I have to get out of the US dollar? Things to go to zero? No, I disagree violently with Jim Rickards and the gold bugs on this. Gold is going down, not as much as other commodities, but going down a lot, like 60, 70%. And then it'll grow in the next global boom, only because Asians love gold and not because we're going to be in an inflationary economy that much. And the US dollar and US Treasury bonds, 30 years especially, are the safe haven. And second would be Australian long-term government bonds, because Australia has the lowest government debt in the world of any major country and the best demographics, but the US is still overall the global safe haven where money's going to go to. So I like US dollar, US Treasury bonds, Australian dollar second, Australian Treasury bonds. I don't want China. I don't want Japan. I don't want Europe, any of this crap. And gold is going to go to $900 to $1,000 before it goes into a longer term boom. And then it's going to have mediocre returns for 20 years into the next commodity cycle. Fine, love it, but I'm not dying to buy gold.
Harry, Jim Rickards is saying only as late as 3 months ago that gold is going to race to 15,000 US an ounce. Did you hear what I said?
I did.
15,000.
I'm like, is he dreaming? Well, okay, great. Let's look at this. How much money have we printed since the 2008-9 low in the world economy and the GFC that hit everybody? We've done non-stop money printing, and we just went 5 times down, let's call it, in the last year. What's gold up? Up a little bit, down a little bit. We have a downturn. Remember 2000. I'm just going to ask everybody in this audience to look back at 2008. And I think it's going to happen quicker this time because we already learned this stupid lesson. When the downturn started happening, people say, oh, government's going to print more money. Oh, that's going to cause inflation, and that's good for gold. Gold went up only a little bit in the first half of 2008. As soon as Lehman Brothers went down and people saw, oh my God, we're in a deflationary downturn like the 1930s, what did gold do? Went running for mommy. It's not a deflation hedge, it's an inflation hedge. And if we were in the 1970s inflationary crisis and every recession leads to the next boom and higher inflation, gold would have been the best safe haven, the best investment. And it was incredibly good back then. This is a deflation. This is the winter season where high quality bonds are favored. Only in the inflation crisis, like 68 to 82, are gold and inflation hedge favored. Gold is an inflation hedge. And I'll tell you right now, anybody that's telling you that Bitcoin is an inflation hedge is a freaking idiot, okay? It's not an inflation hedge. It's Bitcoin is simply a greater bubble, the greatest bubble of the stock bubble here, and it's going to crash as much or more than stocks. It is not a safe haven, and gold is not a safe haven in a deflationary crash, even though it was in the inflationary crashes of the 70s. So that's what I'm saying. You have to understand, again, what did I say from the beginning of this whole presentation? You have to understand where you are in the demographic and technology cycles. And if you do, you know what's coming for years and even decades in advance. And it's not like, oh, does in a downturn, does the gold do good or not? Gold does good in an inflationary crisis. It does bad in a deflationary crisis. Okay. Gold is not the answer. You got gold in your portfolio, have 5 to 10% for diversification. And I wouldn't even have that. But if you want to have that, have that. If you're betting on gold to save your ass, you're not going to have an ass to save, is what I'm saying.
Harry, I can feel that I'm going to have a second bout with you and Peter Schiff because it'll be pretty ugly, much better than the last one. So I'm going to tell everybody I'm going to do part 2, Harry Dent and Peter Schiff. So get yourself ready.
I love Peter Schiff because he's got energy and he's a good guy. He lives right down the street from me. I like Peter Schiff. We have different views, but I like debating him because he has energy and passion like I do for what he has. He has a reason for what he's saying. I just disagree with him from history. That's all. I like the guy.
Harry, we've got the vaccine now. And what do we see now? Obviously, we still can't travel. We don't have too many people coming into Australia anymore because we don't have...
Including me.
You can't come here because
I cannot come here for a year now and probably not till the fall, I would guess.
Well, I'm not too sure how long before, but what's your guesstimation of the world economy coming back to some sort of travel and people getting around, because there's nothing happening right now, and places like France and other places have gone into a bit of a lockdown, and it's been pretty serious in still some parts of the world, not here in Australia, but in other parts of the world.
Yeah. I mean, I hate to say it, you guys are always so intelligent. It's kind of like embarrassing that you guys always do the right thing. You have, I can't speed in Australia. You have the best laws and stuff. People are civil. People are nice in Australia. You have a high standard of living. I love Australia. In fact, your weather is better than most of the United States. But you know, we are more innovative, and certain countries are more. And this whole thing goes up and down with this. I am scared here right now. The US did the worst in reacting to this at first, but infections and deaths have come down almost the fastest, but they're starting to come up already in Europe. And I think they're going to bounce back. I watched the pictures. I'm sitting in Puerto Rico watching South Beach with all these, young people. Nobody's got a mask on. Everybody's running around drunk and stuff. Come on. We have to see another month or two and see how much it comes back. It's already coming back in Europe. So that's a little bit of a scare. But the truth is, we know human nature. We're social beings. We like being around people. We like kibitzing and whatever, flirting, whatever we do, And this is a threat to our entire lifestyle, and people fight back against it, especially the younger people. So we have to see. I think that it has peaked in the US forever. That's what I think. I look at charts, 5 waves, Elliott Wave patterns, like I said, boy, this is a perfect 5th wave peak, perfect A wave downturn. We're maybe in a B wave bounce and we go down. I think the US has peaked. Australia, you never had that big a problem because you guys are smart. You're ahead of the game. You cut it off before it happened, and you didn't let immigrants in too much. So you're in a good position. I worry about the US having a second wave. I don't worry as much about Asia, and I hate to say this, but it's kind of hard to ignore. The conspiracy theories are the Chinese or the Asians set off this disease knowing that the Western cultures don't follow the rules and are individualistic, and this thing would take them down, and the Asian people would follow the rules and not get infected. And that's what's happened. It started in Asia, whether by accident or purpose. I'm neutral on that. It just happened. But it is true that it's being harder to be contained in the West and the US and Europe because we are more social and we don't follow the frickin' rules. We're individualistic. In China and Asia, people are conformist. If the government says follow the rules, we do it. Not in the US. We don't do anything we're told, and not in Australia even, but you guys are kind of isolated and in the right side of the world, and you guys admirably really handled this very well. So I have no concerns about Australia and New Zealand. My concern is when they will let me as an American into Australia again, because America right now and Europe are the worst sectors, and Europe is already bouncing back. I'm waiting about a month or two to see if the US does the same thing. Right now, this drop looks very convincing. I think people in America have finally gotten the message that you just have to wear the damn mask and you just have to do social distancing. And so far it's working, but I'm going to give it another month or two, Greg. Europe's already starting to fail on this. And that gives me a warning, because we in America are like a lot like Europe. We followed their trends more. So I'm hoping we don't bounce back, but it could happen.
Well, we
I would not
certainly
worry about Australia.
no, we locked up the moat, and so we didn't let anybody in. But not sure when that'll happen. What about cruise ships? And are cruise ships going to ever recover out of this?
Well, no, they will, because people love it. I hate cruise ships. Okay, my best cruise was in Australia on a small cruise ship in the Barrier Reef with 15 couples, 5 European, 5 Australian, 5 US. Guess which people I hated the most? The US. Braggadocio US people. The Australians were fun. The Europeans were elegant and classy. And it was great. I think that the cruise ships are obviously the most targeted because there's so many people on, but it's also the easiest place to actually test and control people. So look, I do not like big cruise ships, so I'm the worst person to talk about this, but I don't think cruise ships are going away. Especially cruise ships. In fact, I have a number on this. Age 74 is when people peak in cruise ships. And that is still many years ahead boom for US, Europe, and Australia, especially Australia. You guys have booms and everything, but I think cruise ships will come back, but it will be slower than other sectors. Because, I mean, when you have this scare of COVID, do you want to be on a ship with 3,000 people this close? But I don't think, I think in a year or two, that'll be over. But it'll be slower to come back. So the cruise ship industry may never quite be the same, but I think it will come back strong. People love it.
Harry, thanks for joining us for this chat today. But can you tell everybody why they really should stay and listen to Sean? Because, you know, Sean has some great things to share. Could you introduce Sean for me?
Yeah. You know, part of what I tell people here, and debating all these people, Peter Schiff and James Rickards, and I mean, people who I respect because they at least have alternative views in a time where most people were in la la land about this endless boom and money printing and thinking you could really get something for nothing. What I tell people is, in a time like this, you have to understand that we're going to have much more volatility down, I think more, and up. But even in bear markets, the bull market reactions to bear markets are more violent than even bull markets. Bear markets are the most volatile. And I think we're entering a bear market phase for many years. So what's the answer to that? Okay, well, it's everything from you can be in the safest bonds to being maybe mildly short stocks, or you can be in alternative investments. And the best alternative investments are simple. They're people like Sean that have time-tested investment strategies for making money in up and down markets. So that's what I'm saying. I know, but especially since there's going to be so much government reaction, markets are going to go down violently and up violently. So I say, just like we said earlier, Densector Fund, you should have maybe 20, 30% as a core fund in that. This is something for people willing to take a little more risk. What Sean does is teach you to, or allow you to invest in options that can make money in up and down markets. And the problem when you hear the term options, people think, oh, highly leveraged investing. No, the smart people in the industry, like Sean and many others, use options to limit risk. You can take a little bit and bet more to limit risk on the up or downside. So the key to options is understanding how to employ them, and especially for any investor, okay, if I'm interested in this, how much do I want to put in my portfolio? This is something you might put 10 or 20%. This is not even more than the Densector Fund. This is not something you'd put 100% in, but it is a way. And again, I stress a systematic way of investing in something that can do well in up and down markets. And I am going to promise you, whether I'm right or wrong on my specific targets, we're going to have extreme ups and downs in the markets for the next 2, 3, 4 years, more than you've seen in your lifetime. So I think this is something everybody should consider. You should consider the risk of it. But Sean, from what I've seen, he's our most popular speaker when I come to Australia and we do these webinars. And he's like the reigning expert on how to invest in options in a systematic way in an uncertain time. So yes, I think you absolutely should stay and listen to this and decide if it makes sense for you.